Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, we're going to be diving into the shorter time frames of Bitcoin, giving you guys an update inside of the short-term price action, and then mapping out where I think prices are going to be headed in the short term. We have just started what I believe is going to be our short-term range, at least for the next month, as we ultimately figure out which direction prices are going to go. The best thing that we can do for ourselves is understand what direction the markets may have so that we can go about making the most sound plan moving forward from here. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are going to be provided for you in the description for both of those. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. Alrighty guys, so here we are to take a look at Bitcoin. We're going to dive into some things that I think are going to be the most important to talk about. Now, what I think is actually going to be playing out from here is really us creating our first opportunity of a range. Now, we remember that all the way throughout this period of time, we established a range where we were pretty much just ping-ponging back and forth off of these two different levels. We were bouncing back and forth all the way in between here until finally, we got deviation and then back down. Continuation. And so what we're doing right here is pretty much the same thing. It looks almost the same price structure. It's not really that much different. We get a low, we get our capitulation. It's very similar to this move that we saw here. Prices rally back up, get rejected. That becomes our resistance right there. Even though this high came up and actually went a little bit higher, it doesn't really change anything. Both of these were rejected at the same level. Now, we do have a support. Keep in mind that where the support was in our last little channel, we originally where we capitulated and then bounced back up into resistance. After our rejection at resistance, we came down here and made our first lower high, right? We kind of bounced here at support, then we came back up into resistance. That's where I believe this green level is. It's kind of the equivalent of that same thing. And so now that we're starting what I believe is a new range, we can look to play this range and trade this range. Now, right where we're at in the midpoint of the range, it's not really a good time to long, it's not really a good time to short. What I would personally be doing is waiting for a reaction either off of this support level at about 19,750 approximately, or waiting for an attempt at another rejection at this high, because this is all very possible, and that is just something to be watching out for. Now, when it comes to taking a trade on this, don't be surprised if we get something like this type of a move that happened up here. Keep in mind that it's still very possible we could ping pong back and forth before we ever get a big swing out of this. But generally what I've noticed inside of markets is when we've established a range and we're kind of going back and forth in between the range, wherever the deviation comes. Now what that actually means, deviation is when we have a given trend and then we deviate from that trend, and then we go in the opposite direction, right? So keep in mind, we had this channel, we were going back and forth, back and forth. Well, finally, we got this move past. This was a clear break past our resistance. We went and made a nice extension up into the upper part, well above and beyond all of our resistance inside of this range. And then what happened with the prices, we immediately went to new lows. Now, this is kind of what I was trying to make of my point. Whatever direction you see the deviation play out, generally the prices will go the opposite way. That's not always going to be exact. You can find plenty of examples where it didn't do that. But for me, what I've found is when we're in a given range, and let's say that we deviate to the upside like we saw here, the likelihood of prices going back down to a new low is higher than the chances of us just breaking out, right? And that's what I've found. In true deviation, whatever direction the market deviates, the prices are going to continue in the opposite way. So we deviated to the upside here, prices immediately sold off for a lower low. Now, in that same philosophy, let's keep this in mind. Even if we come back here and kind of ping pong back and forth for a little while, that doesn't change anything, but eventually we are going to get some sort of a deviation. And this might not even be a super strong channel for very long. We might only get a short-term bounce here, and then we might actually start rejecting in this area, and then this could turn into resistance We might even come back down to retest the wicks. That is all going to be waiting to be decided. But what I'm telling you guys right now is if you're simply looking to trade the ranges. You long support, you short resistance, and then whenever the trend stops playing out, in this case, whenever we deviate, that's what you're going to be looking to play. So in this case, since we had such a big move to the downside, let's say that we actually get a deviation below the support. Maybe we bounce up here, we come back down, and then we end up coming and clearing through this green box. What if we do something similar to the move that we saw up here, except to the opposite side, where we kind of come down here, we make these wicks, but we immediately jump back up and we reclaim this support. If we get something like that, if we actually deviate below the support and then we bounce back up and reclaim that support, that shows that there's a lot more buy support inside the market, right? In the same way that we can take that philosophy and look at it from up here, we were bouncing throughout this period, but finally, the buyers were able to get a break outside of this resistance for the first time in a month, right? We're going sideways, sideways, sideways. Finally, the buyers get a buy past the resistance. And then what happens? Well, the sellers are too great and we make a lower high. So what that shows us is that there's too many sellers inside of that given range. And that's going to be the case no matter what direction the price deviates from. So as we've just made this lower low, and we went all the way back down to 17,500, what we're looking for now is when is our bottom going to be taking place? And what I'm personally going to be watching for is when a deviation takes place. Whether we end up clearing the range highs or whether we end up clearing the range lows. Wherever that deviation comes in, I think will ultimately tell, or it will give us a nice clue as to the direction the market will take. And so with us now just barely creating our first resistance here, I believe that we will come back down and retest the support range. This to me looks like a very similar setup to over here. You guys could play the range in here. At the very end of the day, it's nice when you can find a range to trade, because let's say the prices come up here, and let's say that we take a trade at like 21,008, right? 21,800. Let's say that we take this trade. Well, since we're so close to this resistance, I could run maybe a 1% stop loss or maybe a 2% stop loss or something. I can have a really tight stop loss in here. And with us taking that trade right at that resistance where we've seen two different reactions, if in fact the trade follows through like we think it will, these are the type of trades that you want to take because usually they're instant profit. And then there's not a lot of risk because you're only taking, maybe 2% risk. Whereas on the downside, if we're able to actually make this trade, you're looking at a solid 10%. So for every 2% you're sacrificing, you're going to gain 10%. So that's kind of the big thing on why it's super profitable to trade these ranges, because we can set really tight stop losses in here. We can see certain levels that we've reacted to. Now, let's actually look at this on the opposite way, because we actually haven't really had a super strong attempt at this support yet, right? We did make a couple bounces here after our original rejection, but I believe that we're going to come back down and retest this range. And so we could play this once again from here. Let's say that we take a buy. Let's say that we post our entry here at 19,746. Well, we can post once again maybe a 1% stop loss. We could run this one a little bit tighter here. Because keep in mind that if we end up sweeping these lows, we get stopped out, so what? If we reclaim the lows, we can end up taking the trade again. Or if this ends up becoming resistance, we could actually open a short and target new lows. That's what the fun thing about trading these support and resistance ranges is. It's not super complicating, and it's not like we're always going to know what's going to happen. The prices are going to stop us out. They're going to mess us up sometimes. That's just the way the market goes. But as long as we're buying here and setting these tight stop losses, or it doesn't even have to be a tight stop loss. You could set this as a 3% stop loss if you wanted to, because the risk to reward is still going to be solid. I mean, if you get an entry down here in 19,750 or whatever, and we run all the way back up to the range highs or approximate, you're looking at a 10% swing versus a 3% loss. So no matter what, you're going to be better off having that risk to reward, because even if you're wrong, if you take 10 trades and you have the same risk to reward, you only have to be right on a couple of those trades and you're still going to be profitable. Meaning you could be wrong on over 50% of those trades and you're still going to be profitable, because you're only ever risking a small amount versus the gain to the upside is always going to be a much greater amount, right? And so that's why it's really important that we play these ranges with a proper risk management trading plan. And so this is kind of what I'm seeing in the short term. I just see this range that's developing for the people that do want to actually play this as a day trading opportunity. This is personally what I would be watching for, pretty much the same sort of things that we just went through over here, or even the same sort of things that we went through here, because we could have drawn this kind of in the same fashion, right? Where we have a support level down here, we're kind of bouncing off of that, and then we've got a resistance level right here, right? So we support resistance, we're just bouncing inside of this channel. Well, where does the price deviate? Well, it deviated to the upside. Prices actually broke outside of our resistance, right? We never made a move below this until, over here, but that's a different story. These were all bounces off of our support, right? And then what we see over here, prices actually did get a momentary breakout, right? Even though it was a short term, it was just deviation. Where did the price ultimately resolve after the upwards deviation, right? We had deviation to the upside. It was a bull trap. Well, the prices immediately sold off for a lower low. And so that's why I'm pointing out to you guys that in this short-term range, even if you decide not to play the range as a day trading opportunity, let's just dive back in here real quick. Even if you decide not to play the range like that, I think that whatever way we deviate from, that is going to show the direction of the market. And it happened in both of our recent consolidations. We deviated to the upside, we got lower lows. We deviated to the upside, we got lower lows. And so I think it's safe to say, or it's something to at least watch out for, that if we deviate the highs again, it's most likely going to have a swing to the downside, even if it's just a move like this. Kind of deviate up here, and then we come back down and just retest these wicks. If we deviate to the upside, I would expect a big move back down. That's just the way it's been playing out, and so that's also what I've seen play out oftentimes inside of ranges anyways. Now, with that being said, if we've had two different times where we've deviated to the upside and gone down, what's to say that we can't get the opposite where we maybe deviate below this green box, do something like this, and then that's actually what starts our true bottom. Because keep in mind, guys, what oftentimes will happen whenever a market is dictating whenever the bottom is going to be, when we're forming a true bottom, especially in a deep sell-off like this. I mean, this is a big sell-off. From the highs of the move, we're down like 75% approximately from the highs. And so this is a big sell-off that we just went through. After such a prolonged sell-off, what we'll sometimes see when we form a bottom is us actually come back down and retest the midway point of the wicks. That is just a pretty common thing that'll end up playing out. It's pretty much the same thing that happened here. The only difference was this wasn't a bottom, and then we went for another new low, right? But we did that same type of a move where we kind of rallied up, we rejected, we kind of came back down to the midpoint, and then that was when we got a decisive move, even though it was just deviation. I think that these are all things that we need to be watching for in the short term with Bitcoin. I would love to see a deviation to the downside, because that is going to ultimately give me a little bit more confidence that this bottom could be in. With us having such a significant sell-off, I think that it will be a good opportunity to play this deviation if we actually do get it. Keep in mind that I don't think that the smartest thing is going to be simply trying to buy, catch a falling knife. I mean, if we start selling off in here and we start going below this green box, I don't really think that the smartest thing is going to be to try and catch the falling knife, because we don't know how low the deviation goes. We don't even know if it's going to be deviation. It's never smart to base your strategy around a what if, and that's why I'm kind of drawing to you guys this range, because we can guarantee a range to the point of which it fails, right? It's only going to go as much as it's going to go. But what we can say is ranges have played a very significant value inside of trading plans over the last few months. And with us now, what looks to be creating the very early stages of our new one, these are how I would personally look to be playing it. Long support, short resistance. If in fact we do get deviation below, have a stop loss in place. If you get stopped out, it's okay. Because keep in mind that if this is deviation, even if you get stopped out right here or something, it doesn't really matter, because in deviation we would reclaim support. And you could go long again right here at that reclaim. So these are all just thoughts and perspectives I wanted to share with you guys. I wanted to get into the shorter time frames because I didn't really think that there was a whole lot more to talk about besides that. Regardless, we're going to go through some consolidation before we cement this low. Most likely we'll probably have a month of range, just similar to what we went through over here. We don't really want to be ranging too long, otherwise that's most likely going to signal more downside, more exhaustion by those buyers that are stepping in here. What we'd really like to see is this turn into more of a V bottom. Inside of a true bottom, you kind of want it to happen pretty quickly. You don't want us to really be sitting here sideways and sideways and sideways, because us going sideways and us ranging back and forth, it literally just creates more of a probability of us resolving in the continuous trend. In this case, if the trend's been down, so if we start ranging sideways, the likelihood of us seeing more downside is much higher than a bottom being in. And so we do need to see some sort of buyer stepping in here, you know, a deviation from this low part of the support trend. But I will give you guys updates as we go. I want to give you guys this update as a way to give you guys a little bit of a trading plan. If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also sign up for my VIP group. Follow all the trades that I take, all of that fun stuff. Links are going to be in the description for that. Thank you guys so much for this opportunity. Thank you guys so much for tuning in for this video. And with that being said, I will catch you in the next one. As always, peace out.